everyone. Thank you so much for joining us once again for another edition of Your Money, where we are helping you to earn money, protect money, and save your money. And we have been so fortunate over the last few months to talk with some of the best CPAs we've got in New York State. It has been hugely informative. As you know, if you've been following this, we've been talking about how you can protect yourself as a small business, but also what's in the new legislation that came out that governs taxes when it comes to tips or car payments, all of that. So a lot of great information. But here we are. So happy New Year. January 1st brings us into tax season for a lot of CPAs out there. This is the start of their busy season right through April 15th and beyond. Joining me now, you might recognize Kelvin Harris, as we have talked before. Kelvin, so great to have you on again. Thank you.
I'm glad to be here. Thanks so much for having me again.
Of course. So when does it really, as January 1st, do you start getting the calls and whatnot? Or is it once people start getting their W-2s, when does it really ramp up for you?
I'd say January, interestingly enough, tends to be a little quiet at the very beginning of the year. As we get a little further in the month, it definitely picks up in so many cases because individuals should be receiving their information by late January, early February. That's when it really starts going. So we're in a very oddly quiet point, but it'll get loud very soon.
So at what point, I'm guessing you have to do your research and all that.
Yeah.
Do CPAs have all the documents that they need to kind of update themselves so they know the changes that are on the way?
Yeah, CPAs generally have all that information already. The thing is, even though for most people, at least for the individual returns, they think of this period, from the start of the year through April 15th, but CPAs are really focused on taxation and accounting rules year round. So even for newer rules and regs, we're already up to speed on them. So it's really about when do we receive the information from our clients and colleagues, but we're already pretty much up to speed on things.
Yeah, that makes sense. So people are when usually for me it's the W-2. There's lots of different
Yeah,
tax forms. When that comes in, I
right.
go, "Oh my goodness, I got to
Now it's
get
time
this
to go.
going."
Right.
Exactly, exactly. Is it
Right.
is it better? I mean, just because there is a pickup, and I think a lot of us are naturally um, a little slow to the pickup when it
Sure.
comes to this, procrastinators. Is it going to be easier for you, but also better for me if I get that documentation into my account sooner rather than later?
Yeah, that's such a good point. The answer is the sooner the better, because what's so easy for all of us to forget is that the odds are your tax provider, your CPA, is not only doing your taxes. They have a lot of other people that they're trying to help. So that the thing is, the sooner you get your information in, the more likely it is that you'll get your information done quickly. Every tax preparer I know, every CPA I know, will always have those individuals that send them information on April the 14th or April the 15th and still expect for their tax returns to be done. Well, that you're going to almost always be a person that gets extended and you're going to get a little more time. So as soon as you have your information available and as soon as you have information ready, send it over. Get it over to the tax preparer as soon as you
Yeah.
can.
And I'll tell you, before I had a kid and all that stuff, I used to get money back,
Yeah.
and and I used to hustle because I wanted my money back, right? I mean, the sooner you get this, the sooner you can get your money if you're getting a refund,
That's
correct?
right. Absolutely. Absolutely. And it's worth noting that with all the things that have occurred, we're in a new year, but many will remember in 2025, there was all sorts of transitions. There was a government shutdown. There were a lot of individuals in all areas, including the IRS, that were out of work, and many of those have not returned from the reductions. So we're talking about a case where the overall population is the same, but the people who will be providing that service, in many cases there are fewer people available. Now technology certainly helps things along, but you're going to put yourself in a much better position for everything if you can provide your information as soon as possible.
So, what do you suggest? Because I over time, having made many mistakes of missing out, do
Yeah.
you create a list of things, a checkbox? Okay, I need to get
Yep.
my mortgage statement. I need to get my W-2. What do you suggest for folks?
Absolutely. I think you said it right there. Prepare a list of what you need. You should really start with everything you needed last year. And, hopefully you had a list from last year. Then you can just take that same list, look for that, and then think about, okay, what is different last year, or what's different now that I didn't have to do this year. Now, truth be told, your tax preparer, your CPA should help you with that list and make it very easy for you. But yes, start with that gathering now. Even though you may not have everything you need, start gathering it now. Some things you don't have to wait for. Some of the items you'll already have available. So gather it all up. You'll make it so much easier on your tax preparer if you can give them everything at one time.
So, Calvin, I was reading an article. The headline was something to the effect of there have been changes at the IRS, but you can still file on your own for free. And I thought,
Sure.
well, I didn't even know that was a question. Like, that been a
Right.
concern going into this tax season that the changes might actually impact those who wanted to file by themselves for free?
Yeah, it always is. I think anytime you have a change, there's a concern on whether individuals are going to be doing things accurately, whether it's for free or otherwise. So I wouldn't say it's a huge concern, but it's always something that we're watching.
Yeah, absolutely. And then, we've talked about this with other CPAs over the last few months, but it's good to review now that we're here with the changes on the way, especially in New York State
Yeah,
with the changes when it comes to, oh my goodness, I'm going to draw a blank on the name of where it's very New York State specific with the income that you can deduct. If you want
that's
to talk
right.
about that.
Yeah, yeah. I mean, there are a few things to be mindful of, and I would start with the federal first, because standard deduction's gone up. But in New York, you've got an expanded Empire State child tax credit to be mindful of, so that's a little higher to be thinking about as well. And there's also been an update on the withholding taxes for both New York and federal. So those are going to be two major things you think about. And we've got an update where you've got a higher threshold for estimated tax payments, as well as some new credits and incentives. Almost every year there are some new incentives, but you have a higher credit for energy savings to be considered of, and additional credits there. And there also is a bit more relief that we expect will happen for middle class taxpayers as well.
That's interesting. So, on average, are people going to see more of a potential refund than they've received in the past?
All things being equal, yes, you should. Yeah.
That's interesting. And then things you shouldn't miss, things that might be beneficial to you, perhaps car loan payment, things like, I guess, some of the smaller things that you may or may not fit into with this new bill. Any recommendations?
Yeah, you mentioned one of them right there, because with those adjustments, that is one item where you may not have the same opportunities that you did before, and this is where it's going to be really critical that when you take all of your information together, is to sit down with your tax preparer to make sure you've considered everything, because there are going to be some cases where items you qualified for before may not be applicable.
So, obviously, I think I told you before, but I've told the audience my father is a CPA. So,
Yeah,
if you can afford one, I highly recommend it because he's caught things that I know I wouldn't. But
absolutely.
if you are not going to go the way of a tax preparer,
Yeah.
what's your advice for those folks who are going to try and do it on their own?
Yeah, yeah, and obviously I'm biased myself toward CPAs and tax preparers because they just simply have expertise that the average person doesn't. But if you're going to try to do it yourself, I would at least make sure that you're using a reputable tax software that you can rely upon, and then go for there. I feel obliged to say that more often than not, and you made a bit of a mention it there yourself, more often than not, the savings that a qualified preparer will give you will more than cover the amount that you would pay. Not all the time, but I see it time and time again to where you bring on that expert, and that expert identified things you didn't know about, and you end up coming out better from making that investment.
Absolutely. And I think the other thing that comes from that too is you and the community within the accounting world have financial experience. So there could be some advice to impart in general that could help you the next year or the year after.
That's right.
Uh,
That's right, and it's worth. And I also like to note that both on the IRS and on the state side, but certainly on the IRS side, there are dedicated tax preparer hotlines to reach out to where they've made special ways for those preparers to reach out. So if heaven forbid there's something that requires a follow up, or something that's a little more complicated, or you just simply want an answer, those expert tax preparers, those CPAs, we have access that the average person doesn't. So it's not just about saving money. It's also about, if heaven forbid you might have some additional follow up, having that professional involved. They have ways of getting information that the average person just does not.
And also just to add to that, if you make a big enough mistake, you could get audited.
That's right, and you'll
What does
want
an
that
audit
person in
look
your
like?
corner.
Yeah, yeah, exactly. So what does an audit look like if that does happen?
Yeah, well, this is where it's going to be so critical to make sure you have all your data together. Because what essentially happens is that whether it's on the federal side or the state side, they're going to go through your tax records. They're going to see what you've provided there. They're going to want to make sure that that you've justified everything you've put down in terms of your income and any deductions or any sort of credits. And they're pretty much going item by item and making sure that what you put in your return is accurate. This will be a time when you absolutely will want the benefit of someone that had done the work before you, because that person will have an obligation to support you in that process.
Yeah, no question. So let's say you get to the end of the process
Yeah,
and you're expecting a refund, and instead they say you owe $2,000 and you just
yeah,
don't have it, right?
yeah,
So uh, what are your options at that point?
yeah. In all cases, if you have any amount that you can pay, even if it's partial, the whether it's the IRS or the state, they would certainly prefer that than nothing. But if you don't have the money, make sure you still file the return, because even though you may have a penalty on the back end, you want to make sure that you've at least checked the box of providing the information that's required. So at least start there, and then you can go through the process of negotiating and figuring out how you're going to pay that amount down.
Actually, that brings up, I never even asked this. What happens if you don't file a tax return?
Well, then you're definitely going to be looking at penalties from when you do when you do file. So
Yeah.
and that's why I said, even if you don't have the amount on there, the deadlines don't change. The obligation to file the returns on those deadlines is the same, irrespective of whether you owe absolutely nothing, you're expecting a refund, or owe a significant amount. The deadline is the deadline. So and so that you didn't file doesn't mean that the deadline doesn't go away. It just now means that you're creating a penalty for the time that you did not file. So you should expect a penalty. Sometimes you can get them waived. More often than not, you cannot. But it's critical that you file.
Is it true? Can you break apart if you kind of anticipate you're going to have something to pay at the end of the year? Can you break it apart quarterly, basic to so you can get ahead of it, so you don't get hit with a giant bill at the end of the day?
There absolutely are ways to do that, and this is where it becomes important to make sure you have a professional assisting you here, because at certain levels there are amounts that you should be paying in advance. So, but yes, it is true. You can break those amounts up.
Interesting. And then if you end up paying more, let's say you estimate what you're going to pay, but
Yeah,
for whatever reason, with the changes in the tax bill, how
yeah,
does that work? Do you get that money back?
yeah. In that kind of scenario, we're talking about a refund still coming back your way.
Yeah. And then after, let's say you get to April 14th and you're like, it's just not going to happen. Do you get a
Yeah.
penalty if you ask for an extension? And how long does that extension last?
Yeah, you have the automatic extension period, which will take you into the fall, will take you into October. Now, but it is worth noting that if you have an extension, but you ultimately owed money, you still could be looking at a penalty. So that extension is automatic. You will absolutely be granted that additional time, but you aren't given additional time for an amount that was due. And people often miss this, but oh, I know I'm going to owe money on April the 14th, so I'm just going to get the extension and I'll get a little bit more time. Well, you get more time to file, but you don't necessarily get more time for the amount that you have owed. So, but in either case, you have to make that request for the extension. The good news is if you do it for the federal, it'll automatically happen with the state, but you do have to file to request that extension.
What enforcement tools does the government have?
They've got quite a few.
Yeah.
I shouldn't chuckle as I say that,
No, hey, I understand.
the reality is they have a lot at their disposal, even with reductions in workforce and staffing. They still have a lot of tools at their disposal. They have, just from the pure access to all the financial information at there. They have dedicated teams that are out there to review information and to make sure that they're obtaining all the tax money that is due to them. So they make no mistake about it, that there is still a fairly robust workforce out there to make sure that all of us are paying our appropriate tax amounts.
Yeah, you got to my next question. I was going to ask whether the reduction in the workforce and IRS would impact. Now,
Yeah,
take away the enforcement aspect. Could it
yeah.
impact the time that it takes to get your refund?
I've heard anecdotally that it is, and sorry for the sigh, because I wish I could give some factual data on there, and I don't have it at this time. But I have heard anecdotally that people are finding delays in all across the board. Delays in reaching people, delays in getting that information. I hope that what I'm hearing is only anecdotal, and that's not really the case. But I think that goes back to why it's so important to file as soon as possible, because even though as we're talking now in early January, we're still 3 full months away from the deadline for most people. The earlier you are in that time, the less any sort of staffing reductions or resource reductions will affect you. So do it early, and you have a better chance of not having to worry about those kind of delays.
Absolutely. So, for your average Joe, let's say,
Yeah.
what are the things that you're going to need to include hand to your tax preparer, or things that you're going to need if you're going to do it yourself?
Yeah, it's this is where the list becomes important. So you'll want to make sure you have copies of everything to where you have money coming in. That would include W-2s. It might also include other forms related to sort of any sort of investments you have. And by the way, if by some chance whoever you were doing work for does not give you the proper form, that doesn't mean you don't have to report it.
Hmm.
A side hustle is still income. So this is a place where even if you don't have the form, but you received the money, you should be recording that information. So make sure you've gathered all the money you've received, and then also gather anything related to items that are related to money you had going out the door. That may be medical expenses. That'll certainly be items related to housing. It may be items related to any sort of vehicle you have. If you're a business owner, you'll have those items, albeit separately, depending on how things set up. So pretty much think of it as anything that has money going out, and any money that coming in. Gather all that available. Gather all of that together. Worst case scenario, if you're using, for example, maybe you're at a point where a standard deduction is all you're going to be using. Well, you're going to gather information you didn't necessarily need, but you certainly want to have it all available and find out you don't need it versus the alternative.
Especially because I've learned over the last few months, we're gonna have, with the changes, we're gonna have a lot more people not using the standard deduction,
That's right.
and that just now it could help you in the long run, but that
Sure.
could complicate things.
Absolutely. It makes it more complicated in terms of how the information is being reviewed. Although certainly the taxing agencies have very robust software that helps them through that as well, and technology is helping them through that. But the moment you're not using standard deductions, your tax return has suddenly become more complicated. That's not to say that you shouldn't do that, because if it's in your best interest, if your itemized deductions are greater than the standard, you should absolutely itemize, but it does add complexity to your return.
Yeah, and you can fit more in this year than
Exactly.
in past years. So
Yep.
there's a lot of people that are going to go well over their standard deduction
That's
and
right.
say, "Oh, it's going to be great for me,"
Yep.
and I
Absolutely.
think those folks could see a little bit of a windfall. I
I
would
would think so.
suspect.
I would think so, and that's why it's so important to make sure you have great records. Well, and I should say, when I say records, these days, it doesn't necessarily have to be anything that you have in paper. As long as you have a way of justifying it, whether it's something that's scanned or not, make sure you have all that information gathered.
You mentioned a side hustle, Calvin.
Yeah.
What happens if, let's say, I always use the analogy, you made some quilts, you made, let's say, $5,000 selling
Yeah.
quilts, but
Yeah.
you don't have an LLC, you don't have
Yeah.
an S corp or anything like that. Can you include that in your W 2?
Yeah, you wouldn't include it in. Yeah, yes, you would actually. I was thinking of the form you received from the information. Yeah, you would. Because that's revenue. That's money you received.
How do you
Um,
do that?
you'll see a place on the
Hmm.
tax return where you would include that information. It won't be compensation from an employer, but it would be additional revenue that you received over the course of the year.
Yeah. To the IRS, would it look like you own your own business, even though you don't have an LLC? I think, like, what is a sole
So
proprietorship or
proprietor,
something?
that's right. Yeah, I think it really depends on where the dollar threshold is, and I think
Mm,
for every individual it might vary a little bit. So for the example you used there, where we're talking about a few $1,000s, that doesn't really sound like someone that has their own business. It might just be someone that's really being extremely conscientious, including everything that they received over the course of the year. Now, if we say that number 5,000 suddenly becomes 50,000, or
mhm.
you're doing really great 500,000, well, yeah, at this point you're thinking, okay, that person has something far more than a hobby on the side, and that's not necessarily a bad thing. It just means that your records are going to need to be a lot better.
Yeah. Oh, a side question, and I don't know whether you know this, but I've always wondered this. You'll get services sometimes and they'll say, "Oh, can you pay in cash?"
Yeah.
And I think to myself,
Right.
are they not putting this on the books? Because then there's no trail. Can you
Yeah.
get in trouble as the consumer in that case?
Yeah, I would say generally, and I want to make sure I'm being careful, as I'm not an attorney on this, but
Yeah.
I think the bigger risk ends up being on that person that's receiving the money,
Yeah.
because they've got money coming in their pocket that they may or may not be putting down. So for you, if you had it going out the door and you paid it in cash, and ideally you should even have a receipt.
Right.
But if you know that it occurred, I would typically encourage you, if you know it occurred, irrespective of how you paid it, you should record it. If
Mhm.
you don't have the information, because if you think about that example, you have money going out the door, you don't have a receipt, but you include it in there. Well, you're just being a very conscientious taxpayer. But you
Yeah.
flip it over, you've got the money you received and you don't record it. Well, now the tax entities, the tax agency might have a different opinion of you. But
Yeah,
the
absolutely.
bigger
Yeah.
risk is for the person that received it, not for the person that paid it out.
And for those who received it, we talked about, how there's certainly some very powerful enforcement tools
Yeah,
at the IRS.
yeah.
What are the penalties for something like this? Do you know? I mean, I know this might be outside your
Yeah.
scope here, but
Yeah, the penalties are going to vary. I don't have the exact amounts offhand, but the general thought is that the goals of all tax agencies is to make sure that everyone's paying the appropriate amount of tax. Nothing
Mhm.
more, nothing less. For the rough treatment we sometimes give those tax agencies is really it's really just that simple. They just simply want to collect the appropriate and the fair amount of items out there. And in their mind, and I can't say that this is the wrong approach, is that if a person has money that they're intentionally not including and they're trying to avoid, that's not right. So that I think that's really where they go. And in so many cases it ends up being, how big of an issue is it? How significant is something out there? Is it a few $1,000s that's a mistake, where a person could easily omit it, versus many, many thousands of dollars, to where,
Mhm.
okay, this seems to be something to where someone's really trying to do something nefarious. So I think in most cases the penalty amounts may vary a bit, but in so many other cases, particularly if you're down to the point of being reviewed by that tax agency, it's also going to come into play on what was a person really trying to pull off. Was there something, was there an unintentional mistake? Yeah, I mean, you still may have a penalty involved, by the way,
Mhm.
but it was an
Yeah.
unintentional mistake or real intent to try to deceive the tax agency. That will have an impact as well.
And obviously, there might be consequences on the part of a tax preparer if there's a mistake. If, let's say, you're doing it for a friend or a family member,
Sure.
are you liable for anything?
As the tax preparer, yeah,
Yeah.
there are always risks that are attached. Particularly if the tax preparer is the one that made the mistake. So that there is risk all around in terms of it, which is a risk that tax preparers take on in terms of the expertise. But yes, there is risk in terms of making those mistakes.
Yeah. Has a lot gone digital for you? Because I remember going to my
Yeah,
dad's office in the 80s and 90s and there was paper just everywhere. I
yeah.
mean, has that gotten easier for you in some respects, or do you have to duplicate things and make sure there's a paper trail as well?
Yeah, I tend to find this depends on the person, because so much of it is digital. In many cases, you can take, just with your cell phone, take pictures of the information and upload them to the tax preparer via an app, and that tax preparer will have everything they need, and you've never even seen each other, because
Yeah.
so much of the information is already digitized. But I've also seen quite a few colleagues that they love the paper. They'll create the paper and they'll do a duplication. But it is much, much easier to do it all fully electronic. Even if there are paper forms, you'll scan them in, or you'll take a phone and create a PDF. So it really depends. But you can absolutely do everything without without touching or creating a sheet of paper at this point.
If someone has a business, would it be, is it standard to have the same tax preparer for both the business and the personal?
Yeah.
Is that, or do you have to get separate? Kind of like with attorneys, is it sometimes
Yeah.
better to get someone specialized in this or that, or are most CPAs prepared to do both business and personal?
Yeah, I'd say this will vary. I absolutely have colleagues that will do taxation, period, whether it's individual, organization, businesses across the board. They're just tax experts, plain and simple. But I also have quite a few that are more experts on the individual taxation, some of them more experts on a particular type of business. So it's really gonna vary. So I can't really say across the board that you find one way or another, but I will say as it relates to a person choosing a tax professional, and preferably a CPA, but choosing a professional, make sure that you know. And really, you should expect that your tax preparer will be upfront on there and say, you know what, I'm really great on the individual taxation, but for your type of business, that's not my area of expertise. But here's someone I can recommend, or here's someone in my office that can do it. So I've seen it both ways, but it's really going to vary on the individuals.
Let's say you don't have a social security number
Yeah.
and you have an ITIN instead.
Yeah.
Should you be worried about going to a tax preparer? I mean, you still have to pay taxes.
Yeah.
So where does that stand? What do you recommend for folks like that?
Yeah, still go to the tax preparer because we're absolutely used to handling it in that situation as well. And it really should not make a difference for a person that's experienced and they know what they're doing.
Yeah, that makes sense. And then for those who speak a different language, are there folks within your organization that have Spanish speaking capabilities or can handle those who don't have English as their first language?
Quite a few. One of the great things about a place like New York is that every single language under the sun is here. I've yet to come across a colleague who hasn't been able to find a way to work with someone due to a language barrier. Now, in some cases, they may end up bringing on, temporarily, someone that can assist in that regard. But that's usually not an issue here. I can't speak in other places, but
Yeah.
in New York State, I have not heard that as a problem to work that they couldn't work through.
Last question for you. The association that you're with, can people go to your website if they need recommendations? If they move to New York and they say, I don't even know where to begin, can they start with you?
Yeah, I'd love for people to reach out to us, to the New York State Society of CPAs. We don't yet have a listing of,
Hmm.
of people they can go to, but I can tell you within our different communities of practice, we know tons of people that are in there all throughout the state, and frankly, because it's New York, nationwide. So certainly start with us, and we can help you out.
All right. Well, I suggest you at least give a round of applause to the person who has their stuff into you first, like the first person who has all their stuff in. So that's a huge accomplishment. Calvin
It is.
Harris, it is, yeah. Thank you so much for the time once again and for connecting us with so many wonderful CPAs around the state, especially here in Rochester. I've been incredibly impressed.
Thank you. Glad to be here as always.
All right. Thank you. All right. So that was Calvin Harris chatting with us this evening, talking about some very important tips as you get ready to prepare your taxes. Don't miss out. And I think the key message is do it as early as possible, especially if you're getting a refund. Come on, get that money in your hand.
Get the Rochester First streaming app today for everything you love from News 8 on demand, plus exclusive shows you won't see anywhere else. Search ROC and download for free on Roku, Amazon Fire, and Apple TV.